Good evening. Hope you all had a fantastic day. Today, the market ended its 4-day winning streak due to worse than expected jobs numbers. The Nasdaq fell 0.73%, while the Dow had a slightly better day as it fell 0.5%. The S&P 500 fared the best, but still fell 0.34%. Yesterday, after the market closed, New Jersey Governor Phil Murphy said that the economic recovery from the pandemic will take years for his state. He said, quote, "We're going to be digging out of this as an economic matter, my guess is, for years." End quote. He also called for more fiscal stimulus, saying, quote, "Every state needs direct federal cash assistance to allow us to continue to employ these vitally needed folks, to allow our state to get back on its feet, to help our small businesses, restaurants. We have no other choice." End quote. As state budgets have been hammered due to rising medical and unemployment costs. Manufacturing data painted a good picture, as a report from the Federal Reserve showed that manufacturing activity increased during early July. The report did note that the future outlook remains uncertain and depends on the duration of the pandemic and the impact on the economy. The Fed said that manufacturing production rose 7.2% last month, after also increasing by 3.8% in May. This beat estimates of a rise of 5.6% for June. Manufacturing levels remain 11.1% lower than they were during their February levels. An economist at Oxford Economics in New York said, quote, "The manufacturing recovery will proceed at a much slower pace compared to the initial partial snapback phase. The renewed flaring of virus-related uncertainty will add to significant downside risks from sharply curtailed demand, supply chain disruptions, and heightened economic uncertainty." End quote. China reported that their GDP grew by 3.2% this past quarter, beating estimates from Reuters of 2.5%. China's first quarter GDP declined by 6.8% due to the hit of the pandemic, which actually happened to be China's first decline in quarterly GDP since 1992. China's National Bureau of Statistics said, quote, "Generally speaking, the national economy overcame the adverse impact of the epidemic in the first half gradually and demonstrated a momentum of restorative growth and gradual recovery, further manifesting its development, resilience, and vitality." End quote. Though many outside experts have long expressed skepticism about the validity of China's reports. U.S. retail sales rose 7.5%, beating the estimates of a rise in sales of 5%. May sales jumped by a surprising 18.2% and 17.2%, excluding automobiles, as states first reopened their economies. The retail sales number is an important number because it provides us with a picture of how the consumer is faring. It is also important because it gives us an idea of where the activity is coming from, as millions of Americans from the services sector are out of work. Ultimately, the recovery of the economy will depend on Americans' ability to stop the spread of the virus. Regardless, U.S. retail sales are back to pre-crisis levels thanks to the CARES Act, which replaced lost income. However, that recovered income is set to expire in 9 days. It remains to be seen if any action will be taken by the government to extend benefits. The European Central Bank decided to keep interest rates in their emergency coronavirus stimulus package unchanged. The latest economic projections from the ECB have pointed to an 8.7% contraction in GDP for the Eurozone. The IMF has warned that the region could shrink as much as 10.2% in 2020. Recent economic data has shown a rebound in economic activity, which has coincided with many European countries lifting some of their lockdown measures. Weekly jobless claims came in above expectations, as they totaled 1.3 million, coming above the estimates of 1.25 million. Continuing claims remain high at 17.33 million for the week of July 4th. Michael Pierce, who is a senior U.S. economist at Capital Economics, said, quote, "There are clear signs that the longer-term damage is beginning to mount, with permanent layoffs beginning to climb and the flow of workers from employment to unemployment still elevated. Moreover, absent a vaccine, The need for ongoing physical distancing will prevent a full recovery, end quote. Initial claims filed in Texas and Florida last week totaled more than 100,000 each state. In California, more than 200,000 workers filed for benefits. Homebuilder sentiment rose 14 points to a reading of 72 in July, reaching the high that it hit in the month of March before the pandemic hit. Anything above 50 is considered positive, and in April, the index plummeted all the way to 30. A National Association of Home Builders chairman said, quote, "Builders are seeing strong traffic and lots of interest in new construction as existing home inventory remains lean. Moreover, builders in the Northeast and the Midwest are benefiting from demand that was sidelined during lockdowns in the spring. Low interest rates are also fueling demand, and we expect housing to lead an overall economic recovery," end quote. Sentiment looks to rise even more as mortgage rates seem to be hitting record lows every week. This has given buyers more purchasing power, especially for newer homes. Of the index's three components, current sales conditions jumped 16 points to 79. Sales expectations in the next 6 months rose 7 points to 75, and buyer traffic rose 15 points to 58. Johnson & Johnson announced that they hope to begin their late-stage trials of a potential vaccine in the month of September. The company also announced earlier in the day that it plans to enter a Phase 1 human trial next week, which will include more than 1,000 participants. The US, UK, and Canada all have come out and accused Russia of stealing information regarding research on the virus. Officials said a group known as APT-29, also known as Cozy Bear, was likely to blame for the attack. Russia has yet to comment on the situation. U.S. Attorney General William Barr accused tech giants Google, Microsoft, Yahoo, Apple, Cisco, and even Hollywood for being, quote, "all too willing to collaborate with the Chinese Communist Party," end quote. He then went on to add, quote, "The People's Republic of China is now engaged in an economic blitzkrieg, an aggressive, orchestrated, whole-of-government campaign to seize the commanding heights of the global economy and to surpass the United States as the world's preeminent superpower. All too often, for the sake of short-term profits, American companies have succumbed to that influence, even at the expense of freedom and openness in the United States," end quote. He even called these companies, quote, "pawns of Chinese influence," end quote. Regarding Hollywood, he said, quote, "Hollywood actors, producers, and directors pride themselves on celebrating freedom and the human spirit. And every year at the Academy Awards, Americans are lectured about how this country falls short of Hollywood's ideals of social justice. But Hollywood now regularly censors its own movies to appease the Chinese Communist Party. Many more scripts never see the light of day because writers and producers know not to test the limits. Chinese government censors don't need to say a word because Hollywood is doing their work for them. This is a massive propaganda coup for the Chinese Communist Party," end quote. These comments continue to add on to the pile of problems that are forming between the US and China. It looks like the government is making steps to passing another stimulus bill as the pandemic rages on and the previously set up financial programs are set to expire. Speaker of the House Nancy Pelosi said, quote, "They know there's going to be a bill. First, it was going to be no bill, and then it was going to be some little bill. Now it's 1.3 trillion. That's not enough," end quote. The Senate looks to release their virus relief plans next week. Pelosi has pushed for another round of direct payments for individuals, and McConnell has said he is open to another stimulus check, though it remains to be seen what limits lawmakers will place on who receives the money. There remains a variety of problems that the two parties need to resolve for this bill to be completed. The state of Colorado joined a growing list of states that are requiring face coverings to be worn in public spaces. The executive order comes after the state reported a total of 38,155 confirmed cases as of Tuesday. The number of cases in Colorado has surged nearly 46% over the past 7 days, as of Wednesday. The bad day was felt across a variety of sectors, but telecommunications and utilities boomed today, as each gained more than 1.2%. Tech performed the worst as the sector fell close to a percent. Both oil and gas and financials fell around 0.6%. Growth stocks performed the worst again today as the rally seems to be dwindling. Value saw the only green today, but the large and mid-cap sized value stocks only rose a small amount. Shares of Hartford Financial rose the most in the S&P 500 today, as investment and insurance services company gained 4.7%. This gain comes as their preliminary second quarter results came in better than estimates. D.R. Horton, which is a home construction company, had shares rise 4.15% as mortgage rates fall and home buyer demand increases. No one performed worse in the S&P 500 than Norwegian Cruise Lines, as shares plummeted 15.62%. The other popular cruise lines fell too, but not as much as Norwegian, due to Norwegian raising $250 million through offering more shares to the public. Norwegian said these proceeds will go to fund general corporate purposes. American Airlines had shares dive by 7.37%, as the company looks to cut around 20% of its workforce. The company is not allowed to cut jobs or pay through September 30th, due to the $25 billion given to the airlines by the government. To get around this, they have offered workers to take buyouts and retirement packages as a means to ease on the pressure of payrolls. Getting into earnings, we'll start off with Bank of America, ticker symbol BAC, which is the large financial services and investment bank. Bank of America had a double beat this morning. The bank beat non-GAAP EPS by 8 cents, as they recorded a gain of 37 cents per share. Revenue was above estimates by $590 million, as revenue came in at $22.3 billion for the quarter, representing a decline of just 3.5% on a yearly basis. Bank of America added $4 billion to its loan loss reserves, bringing the total to $5.1 billion, joining other banks in preparing for a jump in credit losses due to the COVID-19 pandemic. Shares ended the day down 2.72%. Next up, we have Johnson & Johnson, ticker symbol J&J, which produces a wide variety of consumer health products. J&J reported nice earnings as well this morning, as it started off with a beat on non-GAAP EPS by 16 cents, ending the quarter with a gain of $1.67 per share. Revenue was down 10.8% on a yearly basis, but the company acquired $18.34 billion in revenue, which topped estimates by $610 million. Results were impacted by the pandemic, but the company said the bottom line was helped by continued growth in its pharmaceutical business. Johnson & Johnson also raised its full-year outlook. Shares rose by 0.65% today. Next up, we have Domino's Pizza, ticker symbol DPZ, which is the very popular franchise pizza chain. Domino's had fantastic earnings, as they reported a double beat as well. The pizza company had GAAP EPS of $2.99, beating estimates by 71 cents. Revenue was up a nice 13.4% on a yearly basis, as they recorded $920.02 million on the top line for the quarter, which came above estimates by only $6.4 million. The best news from Domino's was that same-store sales rose by 16.1%, better than the expected rise of 11.9%. Shares started the day off high on the positive news, but ultimately ended in the red by 1.49%. Next up, we have Netflix, ticker symbol NFLX, which is the gigantic video streaming and production company. Netflix had mixed earnings, as there were high expectations for the company, which was poised to benefit from the lockdowns. Non-GAAP EPS was $1.59 per share, missing estimates by 22 cents. Revenue was up an astounding 25%, as the streaming giant finished the quarter with a revenue of $6.15 billion, topping estimates by a tiny $70 million. Netflix added more new customers than expected, as they added 10.09 million users versus the estimated gain of 7.5 million. On top of this, the company announced that Netflix Chief Content Officer Ted Sarandos will become co-CEO and join the board of directors. Shares remain volatile after the earnings report, but shares are currently down nearly 10.5% as investors were expecting more growth. Lastly, we have Abbott, ticker symbol ABT, which is a medical device and healthcare company. They followed suit along with the other companies and reported a double beat on earnings. Non-GAAP EPS came in at 57 cents per share, which beat estimates by 15 cents. Revenue was recorded at $7.33 billion for the quarter, topping estimates by $480 million, but still representing a decline in revenue of 8.1% on a yearly basis. Shares ended the day down a slight 0.37%. That is all that I have for tonight. I hope you enjoy the rest of your evening, and I look forward to seeing you all again tomorrow.